This billion-dollar company just went bankrupt. YouTubers claim to have lost everything. Mark Cuban was involved. He lost, well, he didn't lose everything because he's a billionaire, but he lost a lot of money. And so did his fans, the Mavericks, who he sold this all to. I'm talking about Voyager, why it matters, and why what they're doing right now might be illegal. So buckle up. This is going to be a long voyage. With over 2.7 million verified users, Voyager was an extremely popular crypto broker to buy and sell crypto. But even more than that, you could also earn money on crypto you left with Voyager, up to 9 to 10%. Now, I can already hear some of you saying, that sounds impossible. It sounds like a Ponzi scheme. But like all Ponzi schemes, this one was different, okay? Voyager had a plan that couldn't possibly fail. They told users they were able to generate this amazing yield because they took your money and lent it out. But not just to anyone. Voyager would only lend to the most trustworthy people. That's their secret sauce, according to their CEO.
So you're minimizing the risk because of who we're working with.
And they advertised this a lot. They claimed a low-risk approach to investing. They said that they could weather any bear market, which is, by the way, a gigantic red flag that you should never ignore. But that didn't stop popular crypto influencers from hearing about it, who began to either promote it or put their own money into this platform. People like Scott Melker, Andre Jick, Jeremy from Financial Education, people you probably have either never heard of or heard from way too much, such as the life of an internet celebrity. But whether you've heard about those guys or not, the biggest name that I know you will have heard of is Mark Cuban, who promoted this thing as well and actually turned out to be the worst of them all. Just listen to him pitch Voyager as being as close to risk-free as you can get in crypto.
I'm not trying to tell you it's 100% risk-free, but it's as close to risk-free as you're going to get in the crypto universe.
Cuban said this as part of a partnership with Voyager, where he sold the Mavericks, basically the entire city of Dallas, on what was soon to be an insolvent company. But don't forget to use the code MAV.
Fans who download the app, create an account using the promotional code MAVS100, deposit $100 and make a trade, will get $100 in crypto.
And it's just all so pathetic, isn't it? To watch billionaires sell to us like this, the poors. I mean, let's be perfectly clear. Mark Cuban is a terrible crypto investor. He's 0 for 2. We've already covered his last failed venture. Anyways, the point I'm making, though, is that influencers and celebrities were a huge part of Voyager's success. And that makes sense, right? Because financial disclosures from Voyager show they were spending big on marketing, up to $80 million a year. But all this hype quickly changed when the news broke this past month.
Voyager Digital announcing today it's the latest crypto firm to suspend withdrawals, deposits, and trading.
As you're seeing there, basically lost everything in the stock.
But I have a substantial amount of money, like multiple six figures, that is locked up to this day with Voyager that I may never get access to again.
Most of my Ethereum is now temporarily, we'll say. I don't know if Voyager will make it right. Gone. My Solana's gone. Some of my Bitcoin is gone. And a lot of the things that I got paid with in USDC, gone, right?
Man, don't you feel bad for these millionaires who put their money into this risk-free investment? Well, don't feel too bad, because according to some of them, they aren't actually victims.
Like I said, I have been a victim, I guess we'll call it, although I take full responsibility for all of my own decisions. So none of us are really victims, right? We knew the risks and we took them.
That's Scott Melker. And yeah, he seems great. After a lot of his followers potentially lost all their money, he tells them that there's no such thing as victims. This is crypto brain rot at its finest. And it's also, of course, happens to be wrong, of course, because this idea that everyone understood the risks is simply not true, as I'm going to demonstrate. Because let's take a look at that, how Voyager collapsed, to see what people actually knew. It turns out this news of Voyager suspending withdrawals came right after Stephen Ehrlich, their CEO, said that the money was safe.
Our customers' assets are safe and we're processing everything as normal.
And Scott Melker himself said that he was shown evidence that the money was fine.
I hit up their CFO. They showed me a whole lot of evidence that things are fine, that they're operating in a completely different manner. and I continue to hold my assets there.
Of course, this all turned out to be a lie. Voyager wasn't fined. See, it turns out Voyager was actually insolvent because one of the loans they had given out had just gone bad. But they didn't want to scare anyone, so they told people at the last possible moment that they were insolvent. Which brings us to their second lie and misrepresentation, which is their marketing. They said that they had a low-risk approach to investing, but actually it turns out that they actually gave 50% of their loans or more to a single person or hedge fund. Yeah, that's what diversification looks like these days. According to their documents, Voyager gave $654 million of their loans to a single hedge fund called Three Arrows Capital. Now, what did Three Arrows Capital do with that money? Well, they invested it in Luna, which, after it collapsed, basically made this loan worthless. And this is where I realized that Voyager was absolutely full of it, as were any influencers claiming that everyone understood the risks. This is explicitly and provably false. Voyager lied, and not just about the low risks. It turns out there was a lot more to this story too. See, one of Voyager's big claims to fame was FDIC insurance for cash. This is because they claim they had a partnership with a legitimate bank, the Metropolitan Commercial Bank. Now, the reason they were able to claim this, apparently, was because when you put your money with Voyager, your cash, they would then put that money with the bank. And according to them, and some magical transitive property that they made up, the bank's FDIC insurance would cover you even though you didn't put your money technically with the bank. You put it with Voyager. But they said that FDIC insurance applied. They even advertised as much. Quote, "In the rare event, due to the company or our banking partner's failure, you are guaranteed a full reimbursement." The problem is, though, that's not actually what they said in their terms of service. They said you were only covered in the event of the bank's failure, not Voyager's. Quote, "FDIC insurance does not protect against the failure of Voyager," which is a pretty big difference, especially when Voyager failed. And all those people who got in thinking their USD was safe all of a sudden realized that maybe it wasn't. So yeah, that's a pretty massive lie and probably is illegal, although I have to say I am not a lawyer, although it is being investigated as we speak by the FDIC. But speaking of lawyers, this is where things go absolutely bananas. Because Voyager has obviously been desperate to find a way out of this situation. And their latest attempt is declaring Chapter 11 bankruptcy, which I know you might think that means they're going bust, but it's not quite right. See, bankruptcy isn't just one thing. There's many types, which I know is a bit confusing. It's like hearing someone's a doctor and then realizing it's not the helpful kind, it's the lecturing kind. Anyways, the point is there's many kinds of bankruptcies, just like there's many kinds of doctors, and they all do kind of different things. So to be clear, Chapter 11 is not where you sell everything and close up shop. It's a special kind of bankruptcy designed to let you restructure your business to repay debts. Meanwhile, everything just kind of goes on pause. And Voyager loves this idea because it lets them stay alive. They think they can restructure their way out of insolvency by, drumroll please, printing more money. That's right. They're going to print more Voyager bucks and shares of Voyager. Now, the problem with this, of course, is what's the value of coins and shares in a company that is insolvent? It's not very clear. It doesn't seem very high. So this seems like a pretty raw deal for investors. But a bigger problem for Voyager is not that. It's that actually what they're doing might not be legal. Let me explain. See, only certain types of companies are eligible for a Chapter 11 bankruptcy. When you go to file, one of the first things they ask is to describe the debtor's business. They list several options like stockbroker, commodity broker, clearing bank. But Voyager ticks none of these when they filled it out. They say it's none of the above in their filing. Now, this is pretty strange because the CEO describes their business as a brokerage. They say this multiple times. So why does this even matter? Well, the reason they were asked earlier if they're a stockbroker or commodity broker is because those companies and businesses aren't allowed to do a Chapter 11 bankruptcy. Instead, they're liquidated under a very special law called SIPA, the Securities Investors Protection Act. Basically, it's a law designed for exactly this case, when brokerages go bust. And it's good for the investors because they get special protections and are the first to get paid, according to Axios reporting. And this is very different from regular bankruptcies, where investors can be the absolute last to get paid. So a SIPA liquidation could be good for investors. So why is Voyager not doing a SIPA liquidation? Well, it seems like they're trying to have their cake and eat it too, because on the one hand, they claim to be a brokerage, but they're not filing bankruptcy as a traditional brokerage, and instead are trying to file a Chapter 11. And I know it's getting complicated, but this is really important for the investors. The reason they're doing this is because under a SIPA liquidation, even though customers might get a better deal, there's basically no chance of Voyager's plan to print more money and stocks is gonna fly. Not only that, Voyager would probably have to cease operations. And so obviously Voyager doesn't want that. So instead, they're trying to claim that as a crypto broker, they're not selling securities or anything that classifies as a stock or commodity, which is very gray regulatory territory. Not only that, they're claiming that all their customers' crypto is actually their crypto, and that their customers are just unsecured creditors. So the customers don't actually own anything. And this is where I have to tell you that this is pure lawyer jujitsu. They are trying to save Voyager's skin at the expense of their investors. Because let's be clear, Voyager was absolutely happy to advertise things like the easy way to build and track your crypto portfolio. But when push comes to shove, they say your crypto portfolio doesn't actually belong to you at all. It actually means build Voyager's crypto portfolio, because they're saying they actually are the ones that own it. And if you're confused about all this, how this advertising possibly makes sense, you're supposed to be. It doesn't make sense. Not only that, Voyager's own app told people explicitly that they own the crypto they bought. Thankfully, in their first bankruptcy hearing, the judge pointed this out and questioned whether Voyager had even filed the right type of bankruptcy case, suggesting that it met the criteria for liquidating as a, quote, broker-dealer with protected customer accounts, which obviously they want to avoid for the reasons we just explained. This reporting comes from Reuters, and I think this judge is absolutely right. In what world would buying crypto be so different from, say, buying a stock on Robinhood? It's a regulatory mess, sure, but customers deserve regulatory protection. And the only people who's arguing that they don't is Voyager. Although their lawyer, a guy named Sussberg, says that they're doing this for the good of the customers, actually. See, we have it all twisted. They claim that, quote, it would result in a lot of expensive litigation that would benefit no one. Now, to be honest, I think Sussberg is wrong here and doesn't have their investors' best interests at heart, because obviously he works for Voyager, not for the investors. And anytime someone is trying to tell you that your money is not your money and that they've already lied to you about FDIC insurance and all these other things, I would be very skeptical if they told you they're working in your best interest. Instead, it looks like Voyager is acting in Voyager's best interest. But I suppose the real question is, what happens now? Well, it's actually not clear. The judge rightfully points out that the case presents several novel legal questions, and I think part of that outcome will be determined by what Voyager's customers want to do, whether they go along with Voyager's plans or if they raise concerns that maybe they actually feel like they own securities and not just unsecured credit. According to a restructuring lawyer named Robert Honeywell, this could move their claim higher up on the list because owners of securities are more protected than just owners of random things. But with all this said, and the outcome not very clear, I feel like the lessons are actually pretty clear. Influencers and celebrities are bad and sad in this case because they lost a lot of money. Investors are screwed, but maybe not completely, depending on how all this shakes out. And Voyager lied some more about the state of their finances and risk and FDIC insurance, and is now trying to play some games with bankruptcy law to save themselves. And I just can't help but thinking maybe there are some victims here. Now, will Voyager's plan work? I don't know. But either way, if you enjoy high effort investigations like this, please pump the stock. It really helps. And don't forget to use code MAV at checkout.
Code MAVS100